Hello and welcome. You are watching Business Plus here on News9 Live. A very good morning to all those who've tuned into this broadcast. I am Krishna Kumar, and joining me in the studios is my colleague and friend Suyash Maheshwari. Suyash, great to have you on the show this morning. As always, we begin with a check of how the markets have opened for trading in India. Talk to us, Suyash. Sensex Nifty opening in the red for this morning.
Yes, Krishna, Sensex Nifty witnessed a negative opening in today's trade. Now, this was on the back of weak global cues. Now, we saw 1% or 1.5% correction in all three US indices yesterday. You know, Dow Jones witnessed one of his worst falls since March of this year. It was down about 1%, whereas Nasdaq fell about 1.5%. European shares also continue to be under pressure across the board, whereas Asian stocks remained largely mixed. So now the muted opening was expected, and Nifty opened below the 19,650 mark, which was the yesterday's closing price, and for a brief moment of time it dipped below the 19,600, which according to a lot of the analysts will provide near-term support. However, the markets have since bounced back slightly, and Nifty is currently sitting above the 19,600 level. Sensex is also trading below the 65,800 mark, so we are seeing about a 200-point correction on the 30 share index as well. The broader markets continue to remain buoyant. Mid cap and the small cap indices both are trading in the positive territory, up about 0.2 to 0.3% this morning. Whereas we have seen a spike in volatility recently. Nifty India VIX has spiked by about 2.23%, but sits below the 12 mark. Now, talking about sectors, Krishna, most of the sectors are trading in the red across the board, selling. We are seeing, the banking index, the Nifty IT pack, also the FMCG pack, and the auto sector all were down 0.3 to 0.4%.
Oh, goodness me.
Pharma was the outperformer. It was up about 1% in the morning trade.
Okay, barring Pharma, which has been doing well for the last 6 months in India, is no story over there. FMCG, defensive like FMCG, also in the red this Wednesday morning. And also interesting to note that when the broader markets are in the red, you have the mid caps and the small caps in the green, sort of telling you, how to go about investing in Indian markets, when volatility, especially when volatility is so high. Look for that value picks in mid caps and small caps, you'd say, Suyash?
Certainly, and we have seen a couple of weeks back when we saw 3 to 4% correction, in a single day. A lot of the analysts were saying, that the Goldilocks situation of the broader markets is over. It's time to, perhaps look at large caps. But since then, we have seen a complete turnaround. Nifty mid cap and the small cap indices both have continued to outperform markets on a daily as well as on the weekly basis. Even today, we are seeing the market is largely directionless in the last 3 days. Right. But mid cap and the small cap indices, both slowly and steadily, they have been climbing all walls of worry.
All right, so there you go, a clear message coming in as far as the markets opening for trade this morning is concerned. Suyash, we can also quickly, in these kind of market scenarios, we can't repeat enough the importance of stock picks. Yes, of course, Nifty mid cap and small cap tells you which area to look for, but what to look for. It's always about the specific stocks, especially in action this morning, Suyash.
Yes, so among the stocks that we were tracking this morning was Aditya Birla Capital. Now, Aditya Birla Capital yesterday said that it will invest about 750 crores in its wholly owned subsidiary, NBFC Bank. Aditya Birla Finance by subscribing to its equity shares on a rights basis. Now, investment will be made the investment that will be made by Aditya Birla Group will go to fund the growth and capex requirement of the group. Now, a very interesting news coming in this morning. Right. Also, we have seen a reaction on the stock price. I think the stock was trading with marginal gains this morning, and we have seen in the last few weeks or so a lot of these NBFCs trying to bolster their balance sheet in the light of Jio Financial Services entry into the segment, which has created at least an environment of increased competition. Right. Even with Bajaj Finance, we have seen in its upcoming shareholder meeting on October 5th, the board is planning to raise funds, and according to reports, they could raise as much as $1 billion from the market. So, it seems like a lot of NBFCs are investing in themselves. They are, bolstering their balance sheet, creating that war chest to, fight off that competition that will emanate from the entry of Jio Financial Services.
And so is Aditya Bill Capital as well. So it's doing what needs to be done. That's what other companies do when Reliance enters the market to disrupt the situation. But that's one of the big stocks in focus. We'll quickly now take this across to our special market guest who joins us this morning, Aamar Deo of Angel One, who joins us. Thank you, Aamar Deo, for taking time out to be with us this trading morning. Talk to us. Sensex, Nifty, both opening in the red, but Nifty mid-cap, Nifty small-cap in the green as always.
Yeah, I would say that what we are witnessing is that there's some sort of consolidation happening in the large caps, and that is clearly reflected in the way Nifty has been trading over the last few trading sessions, because it did manage to break its all-time highs and then trade substantially higher above that, but currently it's trading below that. So we can say that a top has been made in Nifty in the short term. Because till the time we don't see Nifty sustaining above the 20,000 mark, I would say that it could be in for some consolidation as major support for Nifty on the downside. I would say currently it's around those support levels. So 19,500, 19,600, that's a very crucial zone of support, technically speaking, from the market's perspective. And also what we've been witnessing on the derivatives data is that we've seen that short build-up has been happening over the past few trading sessions. So as you rightly said that in spite of the Nifty, we are witnessing some selling pressure. We've seen some good up moves in the small cap and the mid cap, and that is there to stay. But it's going to be more, I would say, stock specific rather than across the board. Also, if you look at the advanced decline ratio for today, so that's more or less evenly balanced. But the good point is that overall, if you look at the trend still continues to remain positive. But yes, there are some global concerns coming up, the way crude oil prices have rallied significantly, trading above the $90 mark. If it sustains above that level, then that could have some concerns with regard to rate hikes and rate cuts and all that. So those, I would say, thoughts are definitely playing not only in the minds of Indian investors, but global investors as well. And that could play a spoiled sport. But overall, the trend, technically speaking, the trend remains strong and positive. But yeah, we are witnessing some consolidation, and also consolidation is a healthy sign in any bull market. So that should be taken positively, because that gives an opportunity to buy stocks which one has missed.
Now, Mr. Singh, the IT pack, which was, framing some sort of a comeback after a muted start to the financial year, was once again came under pressure after, US Federal Reserve gave a narrative that, higher interests are here to stay longer, and perhaps there will be another rate hike in the November policy meet. So, and today we are seeing that Morgan Stanley has, initiated buy call on some of the IT stocks. So, how are you seeing action going in the IT pack? Is it a buy? If so, what are some of the stocks that perhaps one can look at this point in time?
Yeah, as you rightly stated, what we are seeing in IT pack is more of some sort of consolidation and profit booking, because earlier there were serious concerns with regard to the recessionary fears in the US. So that seems to have somewhat been very well factored in by the markets, even by the IT sector. So currently, if I look at the IT stocks in terms of, I would say, the large caps, so Infosys is one stock, I would say, more or less in for consolidation. I don't see much of a rally between 1400, 1600. That's a range one can see. L&T Technology, however, is in a different zone and space altogether. So this is one stock technically continues to remain strong and firm. It hasn't corrected much in spite of the market correction. So that also speaks volume about this stock. And the stock is still to breach its all-time highs. So this is one stock which on any dip and correction can be used as a buying opportunity. Then I would say apart from that, if I look at other major stocks, so Persistent is also falls in that similar category. We've seen the stock significant rally and holding up in spite of the market correction. It's trading at record highs. So on any significant correction, this is one stock one can look at. Talking about the large cap in terms of TCS, again, TCS and Infosys, they fall in the same category, because if you look at TCS, what we are seeing in TCS also, it's more of consolidation between 3,300 and 3,600. So it's currently around the 3,600 marks, slightly below that level. So one can look at it from a trading perspective, and I see that IT sector, if you ask me, so it's more of a mixed bag right now. So from that perspective, but these are a couple of stocks which one can definitely look at, which I talked about.
Now, Mr. Singh, I also wanted to touch on the fears of recession that are starting to brew once again. You said that, earlier in the year we saw some pressures, but about, recession, perhaps US markets falling into recession probably by the end of the year or the start of the next financial year. However, the concerns have cooled off since then. But Jamie Dimon, the CEO of JP Morgan, yesterday, I think I was reading one of his reports, he said that US markets could face a stagflation sort of a scenario in the next few months or so. Even the data points that are coming out over the last week, couple of weeks or so, the new home sales data, the consumer confidence data, it seems to be missing the street's estimate. So there is at least from data's perspective, there seems to be a slowdown in the US economy. So do you expect this stagflation sort of a scenario playing out, and what could be the implications for the broader markets and perhaps Indian equities also?
I would say that this year, starting I would say from the mid of June till next year, is going to be very crucial for the US as a nation. Because they'll be having one of their, I would say, most interesting presidential elections next year. And a lot depends upon how the current government in the US, that is the Democrats, how they are able to manage the US economy. So they would be making all efforts out how to at least sustain the industry, because that's going to really define whether they come back or not. So that's one major factor which is going to definitely play in. And also, if we go and look at historical trends, what we've seen is that generally the first year and the last year, they generally are stronger in terms of the pre-election year. So from that perspective, the government would want to do whatever steps they could take. But US being more of a free economy, how much the government could do, that also is a concern. But yes, as you rightly said, I would add to it that I've spoken to it earlier also about that crude oil, because that's one major energy I would say driver across the globe. So sustaining above the current levels, so between 90 and 100 will definitely cause a lot of pain, not only in the US but across the globe, and that could effectively tie down the hands of the central government. So if some central banks, they wanted to maintain status quo, if they wanted to look at a rate cut, at least that would be a strict no-no, given if the crude oil prices continue to trade above the $90 mark. So that's one major, and that, as you rightly said, some of the data points clearly point that which are not reflecting the strength of the US economy. And also, if you look at the US markets, we've seen that it's more of consolidation. It's some of the stocks, heavyweights, which have really held up the market. Otherwise, we could witness some selling pressure, and also we are seeing some consolidation there as well. So investors globally, I would say, would be more cautious, because the risk-reward ratio is something definitely the smart money looks at as to what's the risk versus the reward. And but the good part is that markets are not factoring in any unexpected negative news as of today, because if you look at the India VIX or the CBOE VIX, they are within a very reasonable limit. So that also shows that investors are overall comfortable given the data flows that have been coming, and also that's more on expected lines. So as long as the data is on expected lines, I don't see much happening. We could see some consolidation in the markets till the time we see some trigger which is unexpected that comes out like a bolt from the blue.
All right, so that's the macro picture, from all both India and the US, and how that could impact markets. But I'm going to bring this back to some stock-specific action in this morning's trade. Suyash, Vedanta, the stock not doing all that well post the Moody's downgrade.
The stock is not doing well at all. It is down about 6% in the morning trade today. Now, Moody's downgraded the corporate family rating of Vedanta Resources, which is the parent company of Vedanta Limited, from CAA2 to CAA2, and it has also downgraded the senior unsecured loan from CAA2 to CAA3. Now, Moody's said that the company has not made any meaningful strides as far as refinancing of its debt is concerned, particularly debt maturities is concerned, particularly in relation to the $1 billion bond which is maturing at the end of January 2024 and August 2024. And as we have seen, the concerns about Vedanta's high debt has been a big overhang on the stock. The stock is down about 30% on a year-to-date basis. Today we have seen a 5 to 6% correction in the stock as well. So all in all, things are not looking very upbeat for Vedanta.
Right, Aamar, any ray of hope for Vedanta at this stage post the downgrade?
Yeah, I would say that if you look at Vedanta, both from a fundamental and technical perspective, I would say that there isn't the major support for the stock comes at around the 200, 205 mark, because that was the previous, I would say, July low. Last year's July low, somewhere around 204 or so. So it seems to be inching towards that level. And other technical parameters, even from a long-term perspective, they don't really inspire much confidence. So I would say it could be if there is a bounce back, it would be more of a dead cat bounce rather than anything significant uptrend change, because for any significant rally, the stock needs to sustain above the 260, 280 zone, and most of the technical indicators, they are negative. Yeah, they are in oversold territory, so means that there could be a temporary respite, a bounce back, but not much to read into the stock as of now.
Not much to read into Vedanta for now, but we are, wrapping things up as far as discussing this morning's trading session is concerned. But Aamar, stay with us, because we are bringing something very special this morning here on Business Plus. A very special piece of news for stock markets in India, and that is both the government and stock market regulator SEBI are in favor of fractional shares or fractional investing in the stock markets here in India. The Ministry of Corporate Affairs and SEBI, the stock markets regulator of India, that is the big piece of news. But before we go on to even understanding the impact of that piece of news, we thought it'll be fascinating to first break down what fractional trading, fractional investing or fractional shares are. Suyash, talk to us in the simplest of terms. How does one understand fractional shares?
So, Krishna, as the name suggests, fractional trading or fractional investment is a mechanism whereby an investor can buy, less than 1 unit of a stock. So, in essence, you can buy perhaps a 30% stake or a 40% stake in a stock, or however much you want to invest. The idea is you can buy a fraction instead of buying a whole unit. Now, what this does is, it is particularly beneficial if you are looking to enter, stocks with high price tags. I mean, to name a few, MRF comes to my mind. It is trading at about
the most expensive stock in the Indian stock market.
1,09,000 per share. Page Industries is another one which is about 40,000 rupees or so. So it makes the stock more affordable, and it improves the overall liquidity of the markets, as well as it allows it reduces the barriers to entry for investors. So it can help them diversify their portfolio. Also for the company and the stock, it means that their ownership base is diversified, so you don't see a sudden this reduces the overall volatility in the market. So FIIs don't hold much share, so if there is some global concern that is brewing, it would not lead to a sharp sell-off, because there are other investors, other participants also in the fray who can provide some sort of a support. So overall, the breadth improves of the market, the volatility reduces, the liquidity improves, and investors get to invest in more stocks, so particularly stocks which have a very high price tag.
Yes, stocks with high price value, like things which cannot be held together in one stock. That's the amount of money. Look at MRF, a stock like that. That's the best kind of example you can give for why we need fractional shares in the Indian stock market. Aamar, I'm sure this is definitely a good boost, a move in the right direction as far as India's stock markets are concerned.
Yeah, I would say that, see, what happens is that if you look at the market participants and retail being a significant chunk of that, so they generally tend to avoid stocks which are highly priced. So be it Maruti, be it MRF, be it many other stocks. So what it effectively means is that, and you look at many FMCG stocks which are trading at 15,000 and above. So what happens in that case is that they appear to be very expensive overall, but actually that might not be the case, given that the company's performance is stellar and the company is expected to show strong growth. So this sort of opportunity for the retail would definitely be a step in the right direction, because that gives them an opportunity to participate in such stocks as well. And generally, if you look at history also, historical performance also, you'll find that many of these stocks which are highly priced, they tend to perform well and they tend to weather the storm even better. So that opportunity of window of opportunity definitely would be helpful for investors at large.
Right, so that's the word coming in from Aamar Deo on fractional investing. A quick take, Suyash, if I were to ask you, how does this affect sentiment as at a trader level is concerned when they look at something like this? For now, you have the big stocks in the US like Facebook and Amazon and Apple and Netflix and Google, which offer this fractional investing in the US, and to great benefit of the US stock markets and those wanting to invest in these, the bluest of blue chip stocks. But as far as India is concerned, do you think the average trader sentiment will go up, the fact that this is available to India?
It will definitely go up, Krishna. Also, as we are seeing that retail participation has picked up since the COVID-19. I think the new demat account openings is at a 19-month high, and this is at a time where the smart money is largely absent from the stock markets. So for retail investors, it's a very good news, because they can increase their exposure in some of these very expensive stocks such as an MRF or a Page Industries. They can diversify their portfolio. Also, volatility in these stocks will reduce. So overall, for retail investors, it's a very good move and a very positive move. Mr. Deo, there's another very interesting development that is going in the market now. NSE is proposing to add another trading session between 6 p.m. to 9 p.m. for the FNO for the FNO segment. Now
Dow Jones and the Nasdaq, that they have an impact. There's no denying the fact that they have an impact on the Indian markets, on Asian markets across the world. So we'll have to watch out for how this really works out, because as you rightly said, that there's a move to this extent. So this could work both ways. For those who would see it as an opportunity, they get an opportunity window again, because that's the time wherein, if you look at commodities also, if you look at commodities, you'll find that major commodities, be it gold, be it silver, be it crude oil, they see a significant portion of their volatility during the late evening hours because of the US markets timing. So the Indian markets also, if they are open and they have they get an opportunity for investors, present an opportunity for investors. So yeah, it will be looked at both ways, but yes, it will also increase the timeline for the markets. So how different market participants are going to take that's something which we need to see. But effectively, it could give an opportunity for investors and traders to look at and track the US markets and see how that impacts the Indian markets.
Now, sir, what do you think would be the next step? Can we also see more, the number of derivatives contract on stocks also increasing perhaps over the course of the next couple of years or so?
Yeah, that window of opportunity will definitely be there, because what we are seeing here is that overall, the number of stocks which are getting listed, the number of the volume, because ultimately it all boils down to the volume, how the volume is increasing in those particular stocks. So if they cross a threshold limit, then we'll see that more stocks are included, because sometimes we see that the FNO stocks, if I look at them, roughly around 185 stocks would be there around that level. So sometimes we'll find that the number increases. So that opportunity will definitely be there, but that will be more a factor of the other players, other things like how the volumes play out for those particular stocks, because that's going to be the deciding factor for the stock's inclusion in the FNO category.
All right, Aamar Deo of Angel One joining us this morning with, of course, his perspective on the opening of the stock markets, and of course, fractional investing, and of course, extended trading hours as well. Lots to discuss this morning. Thank you, Aamar Deo, for taking time out and speaking to us, and hope to keep having you on the show again and again. But for now, we'll let go of you, and of course, let go of Suyash as well. Suyash, thank you so much, as always, for putting the day's morning market action into perspective. It's time now to take things away from the markets to the online gaming industry, which has been in the news continuously on a daily basis in the recent past because of that 28% GST that's now become a reality, with many calling it game over for online gaming companies. And the latest in that space is that Dream11 has now taken matters to the Bombay High Court, where it's filed a writ petition against that multiple thousands of crore rupees of tax demand notice that came its way. And now the latest we understand is that it's not just Dream11, but several other online gaming companies like Games 24/7 and Head Digital Works were also now taking matters to the court. To help us understand what is the latest, with that and more, we have my colleague and friend Karthik Malhotra now joining us this morning on the show. Karthik, lovely to have you this morning.
Hi,
as
Krishna.
always,
Morning.
as every morning. Oh my God, online gaming every single day. There is so much to talk about with every single hour. We were going to discuss what is going to happen with Dream11. We will discuss that. But the latest matter is that it's not just Dream11. Multiple online gaming companies, because in the recent past, 55,000 crore rupees plus of GST notices have gone out to online gaming companies. So this situation is unraveling fast.
And as the numbers pan out, Krishna, what we are seeing, this 50,000 odd crore rupees of notices already out is going to contribute to just about a third of the total GST notices expected to roll out against e-gaming companies in the next couple of weeks. Almost 1.5 trillion rupees worth of GST notices are likely to be rolled out. Now, the latest, as you just mentioned, is Dream11, but
Yes.
we saw what happened last week with Delta Corp. We saw what happened last year with Gamecraft.
Right.
And it's not just Dream11 alone. And Dream11 apparently has got to notice anything in between 25,000 crore rupees to 40,000 crore rupees.
Yes.
So that's of course a mammoth amount, but compare this even to, let's say, a smaller, yet a unicorn, but the second of the three unicorns in India, Dream11 being one, the second being Games 24/7. Games 24/7 also slapped a show cause notice of 15,000 crore rupees. MPL, Mobile Premier League, which is the third unicorn in the three unicorns in the gaming scene, yet to receive a notice, but I think antennas are up that is going to be the third company to be slapped with such a large tax notice. Now, what is the grouse here? What is the challenge here? The challenge is very simply that in the 51st GST Council meeting, Finance Minister Nirmala Sitharaman had stated that this tax collection is not going to be retrospective. In the same breath, it was also mentioned that this 28% GST on online gaming and sort of, killing that boundary between game of skill and game of chance, meaning that games that require skill will be charged in equal measure as the games of chance, which include casinos and horse racing. What this really did was that Finance Minister said that this is not a revision of rates, this is just a clarification of rates. So in her mind and in her speech, it was clear that this 28% GST on face value has always existed. What were companies doing up until then? Gaming companies, especially those who call their games or the games that they offer to customers as game of skill, Dream11 being one of them. What they were doing was they were charging 18%, not 28%, 18% GST on the platform fee, not on the face value.
Right.
This meant that every 100 rupees put in by a gamer onto the platform, there was, let's say, a 10 rupees of commission that the platform, something like a Dream11, charges. 18% of 10 rupees was 1.8 rupees being paid as GST. Government said nothing doing, 28% on full face value. So 100 rupees coming into the platform, the tax liability from 1.8 rupees goes up to 28 rupees. And that is something that is now seemingly charged retrospectively. So the tax notices slapped on Dream11 are for financial year 2018 and financial year 2019. We are yet to get numbers of FY 2020, FY 21, FY 22 and FY 23. That put together is likely to be something around 40,000 crore rupees. And this is multiple times over the revenue that these companies really make. So the challenge now is in front of course, Karnataka High Court last year ruled in favor of Gamecraft. 21,000 crore rupees at stake there, ruled in favor of Gamecraft. Gamecraft sitting pretty, not anymore. Supreme Court earlier this month stated that Karnataka High Court order cannot be taken as precedent, and Supreme Court on 10th of October this year is likely to hear the matter and hopefully rule on it as well. In the interim, Dream11 has moved Bombay High Court now, stating the Karnataka High Court order as precedent, and is trying to squash this GST show cause notice.
But legal tangles aplenty after that 28% finality, so to speak, or GST on online gaming. We will continue to track the space because this is, this is just the beginning of all the legal ramifications of that, which means that many more companies will be at the courts and fighting it out over a period of time. But for now, we are taking things away from the online gaming space, and but keeping it with the startup space, so to speak. A huge piece of news, Karthik, coming in for startups in India as far as their angel tax calculations are concerned. Let's remind viewers here at this stage that the Finance Act Amendment of 2023 allowed for angel tax to be calculated on the premium of that you're paying for a share for those investing in Indian startups from overseas as well. Until that amendment came in this year, there was no angel tax on anybody investing in Indian startups from, say, Dubai or Singapore or anywhere.
Yeah.
But now that exists. But the latest on that front is that the methodology for the calculation of the fair value of a startup's share. That's where the huge bone of contention was. There was a draft in which about 5 methodologies were given. Finally, now we know, basically, at the end of the day, we now know how to calculate angel tax according to government's rules. Government has given a clarity on how to calculate angel tax, given options of 5 different methodologies in which you can assess the fair value of your startup or your company's share. And based on that, that tax will be calculated. But like fractional investing this morning, we thought, before we dive headlong into what is the latest news on angel tax, let's understand angel tax. These are oxymoron. It's an oxymoron if you ask me, because tax and angels have nothing to do with each other, if you ask me.
Angels and demons, rather.
Yeah, so to speak. So Karthik is here, and we have a very special guest joining us this morning. Siddharth Pai also joining us, this morning. Siddharth, thank you so much. Lovely to have you on the show this morning. Siddharth, if I were to come to you first, quickly tell us, what is the simplest way to understand angel tax?
So angel tax is simple. It's actually an anti-abuse measure that was introduced in the Finance Act, in Income Tax Act in the year 2012. What it actually does, it looks at anytime a private company ends up actually issuing shares at a premium that is above its face value. What the tax department does, the tax department looks at the issue price, the price at which actually given shares to investors, shareholders, etc., versus the fair market value of those particular securities. And any difference between that is actually taxed in the hands of the company as angel tax. So even though it's called angel tax, number one, it doesn't apply on the angel investors. It actually applies on the company. And number two, it is in form of capital tax. Income tax is actually paid on income, but India is unique in the sense that we're taking capital receipts, which are investments, and we're taxing them as ordinary income also. It's a very Indian innovation that's actually come in as an anti-abuse measure. And it came in because in the year 2009, there was an alleged case of money laundering that actually happened. And the case is actually still being fought out in court as of now. So to prevent that sort of issue from actually becoming regnant in the ecosystem, the government in the year 2012 decided to actually introduce this particular provision, section 56 to 7B of the Income Tax Act.
Siddharth, let's just simplify it. You said a lot of things which make a lot of sense, but this morning I'm having my coffee, I'm a little slow on the uptake, so just simplify it for me. Angel tax is not valid only on angel investments. It is equally valid on venture capital investments. It is equally valid on alternate investment funds also investing in Indian startups, right or wrong?
No, so I think the angel tax, there are only 2 classes of people who are exempt from angel tax as of now. The first one are AIFs, your alternate investment funds regulated either by SEBI or IFSA. And the second one is a little criteria for foreign investors that the income tax departments actually release. So in case you are a sovereign wealth fund, in case you're a banking or insurance company, in case you actually are let's say a private equity fund not registered with either SEBI or IFSCA, and you actually meet certain preset criteria, then your investments are actually excluded. Everybody else for that matter, be it a State Bank of India, be it an Infosys, be it a large HNI, and everyone, any of their investments into these sort of startups can actually attract angel tax for that matter.
And what about regular venture capital flowing in? Let's say SoftBank or Tiger Global invests in an Indian startup above the FMV, and we'll come to the fair market valuation also, above that 10% cushion of the FMV, then these venture capitalists also are subject to, not the venture capitalists, the startups receiving funds from these VCs are also liable to pay angel tax on that premium above the 10% cushion?
It is actually possible as of now. If they don't meet the criteria given by the tax department or they're not registered with either SEBI or IFSCA, there is a chance that investment can end up actually attracting. A number of these funds aren't actually registered as AIFs with either SEBI or IFSCA. They prefer to have vehicles either in Mauritius, in Luxembourg, in the UK, etc., to make global investments itself. So some of their investments, as of now, if they don't meet those particular rules, can attract angel tax in the hands of the company.
Okay. And how much is the tax rate? What is the tax rate? Angel tax, yeah. So give me an example. 10 CR valuation of a company, fair market valuation. And like I said, we'll come to the fair market valuation also. But 10 crore rupees, let's say, is the fair market valuation. Add a 10% cushion to that, up to 11 crore rupees, no tax. If you were to raise capital at a valuation of, let's say, 15 crore rupees, then this balance 4 crore rupees gets taxed at what rate?
That's right. It gets taxed at the rate for ordinary income generated by a company, which is about 25.17%, including the surcharge, the cess and everything. So 1/4 of your capital raise goes away. But one very important point, what normally happens in these kind of scenarios is that what the tax department does is it compares the projections that you made at the point of raising capital versus the actual performance based on the audited financials of the company. And in case a deviation is significant, now about 10%, the tax department disregards the valuation report. So the entire capital raised by the company can actually be subject to tax. So in your case, the tax won't be on the difference between 15 CR minus or 11 CR for that matter. The tax will be at 25% of the entire 15 CR. So that's actually the heart of the income tax problem. It's not as simple, because the tax department on numerous occasions has actively disregarded the valuation report, saying that because of the deviation between the projections and actual performance, we don't believe the report is actually valid.
All right. So now tell me something. If this is the calculation, 25% on the entire capitalization and not just on the delta between fair value and the actual valuation at which money was raised, then why is it being rejoiced? Why are startups happy with this new development?
So startups were happy because they ended up seeing a notification, and I think there were some people on social media who didn't exactly go through the whole notification in great detail. I think the important part to note in the notification, it's unfortunate, everyone passes finger first when it comes to matters of regulation. It does a disservice to the industry. One thing to also note is the 5 new valuation methodologies that only apply to foreign investors. It doesn't apply to investments from domestic investors as of now. So if I'm an Indian startup raising money from domestic investors, family offices, HNIs, etc., as well as from foreign investors, I now need to create 2 different valuation reports with 2 different valuation methodologies, which just actually complicates the issue and doesn't contribute to ease of doing business. So I think the fine print is something that the ecosystem is looking at as of now, and they're slowly understanding what are the additional hoops they have to jump through in order to be compliant with this new regulation that got released yesterday.
So this FMV calculation, the 5 new methodologies you said are applicable only to foreign investors. But this calculation of FMV would be valid with or without angel tax, would be a valid tool to understand real market value capitalization of a startup in any case, right? So now help us understand, what are these 5 methods? Very briefly, I know you have a call at 10:45, we'll let you go, but very briefly, what are these 5 methods and what would be the difference in arriving at a valuation number using any of these 5 methods?
So I think that's a very good question, but I just counter that question with another point as of now. What happens no startup is actually valued based on a valuation report. Even there are noted valuation experts like Professor Aswath Damodaran of NYU, who's actually stated that young companies, because of a lack of operating history, because of uncertainty in operations, because of new innovative business models, cannot be valued using any of the traditional methods. And the 5 methods given are actually traditional methods. The 5 methods are your comparable company multiple. So let's say I'm in a SaaS company, another company is valued at, let's say, 50 times P or 60 times
Apple
P.
to Apple comparison.
Multiple over there.
Right.
The second one is probability weighted expected return. So you actually end up creating a probability table. You decide, can this company give me a 3x, 4x, 5x, 10x, go to 0?
Present value of future cash flows.
That's right. So the second one is option pricing. Assuming it's an option, you use the Black-Scholes methods for that. The next is milestone analysis. So the company says, I'm raising, let's say, 100 crores. I can use it that in the first 1 year of operation, I'll generate 15 crores of revenue. Next year, generate 25. Create these kind of milestones and look at how they've actually reached that. The last one is replacement cost, which I believe may not be relevant for startups, especially because most of the startups are asset-light businesses. So the replacement cost of some of the tech, etc., is not the right method to end up actually applying. I think this is more for infrastructure companies and the likes itself. So 5 new methods, but the core issue of the comparison between projections, which are future-looking, and actual performance, which is a synopsis of the past and actually disregarding the valuation report if the difference is high is the core of the issue of angel tax that is yet to be rectified or remedied by the tax department as of now.
All right. And who puts a final go-ahead stamp of approval on the fair market valuation, depending on either of the 5 formulae that you may have used in arriving at that? Who eventually puts that stamp of approval that, yeah, the calculation is correct and this is the fair market value?
So the income tax rules have actually stated that a category 1 merchant banker regulated by SEBI, it becomes a final authority. He has to give you a valuation report signed by him for that matter, and that becomes a valuation, that becomes a fair market value of that particular company itself.
All right, that's Siddharth Pai there, breaking it down in the simplest possible terms. One of the most complex things to understand, angel tax, and we're not going to hold on to you anymore. We know you have another call. We're going to let you go. Great to have you this morning and hope to keep having you as often as possible. Siddharth, thank you so much for helping us decode what angel tax is. And of course, thank you, Karthik, and I'm sure you yourself have become a semi-expert by the time you were done, wanting to ask, figuring out what to ask Siddharth Pai about angel tax. But we are running out of time on the show, Karthik. But before we go any further, a quick and a very, very important programming note here on News9 Live. The big show tonight at 10 p.m. Duologue with TV9's MD and CEO Barun Das, who is in a candid conversation with the founder of the Isha Foundation and spiritual leader Sadhguru. Take a look at this sneak peek.
How do you define success? And is success important?
Success is the only thing that's there in life.
So between happiness and success, which would you prioritize?
Happiness is also success, isn't it?
And then success leads you to happiness.
No.
Then?
Why do you need happiness when you're successful?
How do you feel once you're successful? There's a feeling.
Yeah,
Happiness is an expression of your
already
feeling.
exuberant and blissed out.
An ordinary person like me.
You're a very special guy. You keep on saying, I'm ordinary, I'm ordinary.
No, as I said, ordinary is extraordinary. So maybe somewhere in my mind, the belief that I'm extraordinary.
Duologue with Barun Das featuring Sadhguru Jaggi Vasudev. World premiere on Connected TV. Tonight at 10, only on News9 Live. India's first and only digital exclusive English news stream for Connected TV. Supported by Alliance Broadband.
Make sure to catch Duologue tonight at 10 p.m. here on News9 Live. But here on Business Plus now, let's talk about the latest coming in from Byju, the extremely troubled edtech measure. Karthik, another 4,000 to 5,000 layoffs possibly. How many people are left at Byju's?
Well, still quite a few. So let's look at the data. Krishna, last year when Byju's really got embroiled in this entire mess of audits not being done, of a $1.2 billion debt, etc., Byju's had about 55,000 people, employed in the company. Between last year and this year, 7,000 people have already been sacked. Now, where are we today? Today, apart from sacking and organic exits, Byju's is left with about 35,000 people, out of which 11% or up to 4,000 people are likely to be sacked in the next couple of days or weeks at best. All this development coming at a time when the company has a new CEO who is responsible for this restructuring of the organization, making it debt-free, part of, plan A of the company, and then optimizing costs because there is a cash crunch. The company does not have enough funds to continue running operations. So cost-cutting measures clearly visible, 4,000 employees to be sacked, that's 11% of the workforce. A number of offices to be shut down across cities. Byju's right now has about 19 offices across more than a dozen cities. That is going to be reduced to no more than 5 or 6 offices in all, in no more than 4 cities. So consolidation happening on the cost front when it comes to sacking employees, as well as consolidating the real estate expenses which the company is dishing out. New CEO Arjun Mohan there, taking these very, very hard calls, these very drastic measures in a bid hopefully to course correct, sell off some of the existing newly acquired businesses to also repay the $1.2 billion term B loan.
Apparently he's been given a completely free hand by Byju's Ravindran as well, but I guess Byju's Ravindran does not have too much of a choice at this stage but to give Arjun Mohan, the new CEO, a free hand. But quickly moving on from Byju's, before we wrap things up on this morning's edition of Business Plus, let's discuss the Ambani kids. They also have jobs, although they are, you know who they are, but they also have jobs within the companies that they are owners of. How much do they get paid, Karthik?
Krishna, nothing.
Wow.
Well, it's a family trend, so to speak. So Mukesh Ambani in 2020, as soon as COVID hit, stopped receiving a salary.
Okay.
In the last AGM, it was announced that Neeta Ambani would also stop receiving any salary, and she would only get sitting fee because she's part of the board of Reliance. She would get a sitting fee for every meeting that she sits for, and she would get commission. That commission, of course, is 2 crore rupees per annum. I mean, you know, it's aspirational for a no salary employee. But of course, she's not the employee. She's pretty much, you know, the parent of the company. But even the 3 children, Isha Ambani, Akash Ambani, Anant Ambani, have now decided that they are not going to take a monthly salary. They are not going to be, you know, part of the CTC structure of the organizations that they lead. In fact, they will also only receive board sitting fee and nothing else. So the entire clan of the first family of corporate India, the Ambanis, working technically without salary.
That's in fact a good piece of news to wrap the show up, because good to know that the richest in the country are doing the right thing and going in the right direction. But with that, we've completely run out of time here in this edition of Business Plus this morning. Thank you so much for watching. This is Krishna Kumar signing off.
How do you define success? And is success important?
Success is the only thing that's there in life.
So between happiness and success, which would you prioritize?
Happiness is also success, isn't it?
And then success leads you to happiness.
No.
Then
Why do you need happiness when you're successful?
how do you feel once you're successful? There's a feeling.
Yeah,
Happiness is an expression of your
already
feeling.
exuberant and blissed out.
An ordinary person like me.
You're a very special guy. You keep on saying, I'm ordinary, I'm ordinary.
No, as I said, ordinary is extraordinary. So maybe somewhere in my mind, the belief that I'm extraordinary.
Duologue with Barun Das featuring Sadhguru Jaggi Vasudev. World premiere on Connected TV. Tonight at 10, only on News9 Live. India's first and only digital exclusive English news stream for Connected TV. Supported by Alliance Broadband.